Hello accounting grade 12 learners and welcome to today's lesson. In this lesson guys, we're going to complete a full example of creditors reconciliation statement. So let's get started. Look at the question. It is out of 35 marks. Learners were given 25 minutes. So on 1.1 guys, we have Fatty Superstore. That is the name of the business, our business. Okay, so we are working for this business now. Let us assume that. So Fatty Superstore is owned by Vatiswa, that is the owner. The business buys goods on credit. The business is buying goods on credit from Big Show wholesalers. So Big Show wholesalers will be our supplier for this example. The statement of account from Big Show wholesalers is received on the 25th of every month. Okay, so a statement of account guys, this is now an external document that we're going to receive from our supplier. So this external document, which is the credit statement that we are receiving from our supplier, will reflect one, goods that we bought on credit. Two, it will also reflect any payments that we have made to our supplier for goods that we bought on credit. If we have received a discount from our supplier, the discount must be recorded there. If we have returned any goods from our supplier, that statement must indicate, must show all those items. Okay? What are we required to do, guys, before we can read what is required? Firstly, please make sure that you are liking, you are subscribing if you are from YouTube. Please repost my videos if you are from TikTok. Like as well on TikTok, guys. Share my videos. All right, so let me give you 5 seconds to do that. All right, so let's proceed. 1.1.1, calculate the correct balance as per creditors ledger in the creditors reconciliation statement when 31 August 2025. So we need to calculate the correct creditors reconciliations balance, right? So 1.1.2, what do we need to do? Correct the creditors ledger account, write the corrected amounts in the appropriated column, right? So on our side, obviously, for this question, we have what? The answer book. Here's the answer book, guys. There on 1.1, we need to correct what? The creditors ledger in the creditors reconciliation statement, right? Okay, so before we can continue, guys, I want you to note two important things. When you are doing the creditors reconciliation statement, what do you have? You need to make adjustments where on the creditors ledger, who's preparing the ledger? It will be the business. On 1.2, the business. And then the creditors reconciliation statement, we're preparing this creditors reconciliation statement on behalf of the supplier. Here we have what? The supplier on the creditors reconciliation statement side. I want you to note these 2 points. Once you understand these 2 points, guys, you will forever understand creditors reconciliation statement, right? So one, if the mistake, you remember, we're going to have errors and omissions, right? We're going to have mistakes and transactions that were not recorded. If the error or the omission is from the supplier side, that error or omission will affect what? The creditors reconciliation statement. For our example, it will only affect 1.1.1. But if the error is on our side as a business, we did not record a transaction, or there was a mistake from our side as a business, just know it will affect what? 1.1.2, the creditors ledger. And then there are those transactions as well. Thirdly, guys, there are those transactions that will affect both the creditors reconciliation statement and creditors ledger. But mostly you have mistakes or errors from the supplier, just know it will affect the creditors reconciliation statement 1.1.1 for our example. If we have mistakes that were done from our side as a business, just know that it will affect creditors ledger. So once you understand those 2 points, you will forever understand creditors reconciliation statement. So let us answer 1.1.1 and 1.1.2 simultaneously together. So what happened here? We have information A. Information A balances on 31st August 2025 before the errors and omissions were taken into account, before checking mistakes and transactions that were not recorded. This is what happened. Creditors ledger of Fati Super Store. So creditors ledger, on our side, we are of the view that we owe our supplier Big Show 75,190. But now the supplier, on their side, they are of the view that we owe them 83,800. Can you see those two amounts? They don't agree, they don't concur. If they don't agree or they are not the same, we need to do what? To reconcile. All right, so here's what we'll do. Firstly, on our side, we need to record the 83,000 there, but as you can see, that amount, it is already given. So let's go to our errors now and omissions. B, with the first error or omission, Fati Superstore was granted a debtor's allowance of 1,800 for inferior goods. The transaction was not recorded either Fati Superstore or Big Show. What happened? Our supplier, we bought goods, right? But these goods, they were not in good condition. So our supplier, which is Big Show, they decided to do what? To give us a discount for offering, for selling us inferior goods, right? So if we're getting a discount, that should reduce the amount owed to the supplier. So here's what will happen to the statement. And I want you to check something as well. The transaction was not recorded by Fati Superstore, our business, and as well Big Show wholesalers, our suppliers. So this will affect our records and also the creditors reconciliation statement. So here's what we need to do. From the supplier side, the supplier is giving us a discount. So that discount should decrease the amount owed to the supplier from the supplier side. And then now remember 1.1.2, we are doing the creditors ledger. The creditors ledger, it increases on the credit side when we owe more money to the supplier, and then it decreases on the debit side when we owe less money, or when we are making payments to the supplier, or when we are receiving a discount. So we have received a discount here of how much? 1,800. A discount received will always decrease what? The amount owed to the supplier. Right? I hope you understood that transaction. And then number 2, what transpired here? 5,250 interest charged on the overdue account is correctly stated on the statement of account, but not recorded by Fati Superstore. So an interest here was correctly recorded in the statement. If the interest was correctly recorded in the statement, just know it will not affect creditors reconciliation statement 1.1.1. But what happened? It was not recorded by Fati Superstore. Here we charged interest for not paying the supplier on time. Okay, so interest on overdue account will increase the amount owed to the supplier. So we need to go and increase that amount by crediting 5,250 on the creditors ledger. Remember, on the statement, this was correctly recorded. And then number 3, returns for 2,150 was incorrectly posted by Big Show wholesalers as invoice. Again, I want you to read there. Who is making the mistake? It is Big Show wholesalers. So this transaction will only affect creditors reconciliation statement, the supplier side. So our supplier, we returned goods. Instead of treating this instead of decreasing the amount that we owe them, what did they do? They decided to record this as an invoice, as if we are buying more goods on credit, which means they have increased the amount that we owe them by mistake. So here's what we need to do. We need to cancel that mistake first. That mistake, let's cancel it. We are canceling the mistake. Returns, they were treated as what? Goods bought on credit, which means they increase the amount that we owe them. So we need to do what? To decrease it first by correcting the mistake by minusing 2,180. What do we further need to do? We need to recognize now returns. Returns, they decrease the amount owed to the supplier. We minus again 2,180. All right? So I hope you understand that. What else do we have, guys? So we are told that an invoice for 30,050 for goods received from Big Show wholesalers is recorded by Fatty Store as 3,350. The statement reflects the amount as 35,350. Okay, so here you can pause the video and read this error or mistake again. An invoice for 30,350 for goods received from Big Show wholesalers is recorded by Fatty Superstore as what? 3,350. The statement reflects the amount as 35,350. So guys, this transaction, it will affect both our records, the creditors ledger and also the creditors reconciliation statement, because this is what happened. We bought goods for 30,350, but on our side we only recorded that we bought goods on credit for only 3,350. Can you see that we have undercasted the amount that we owe the supplier? So you're going to take 30,350, you minus 3,350, right? You work out the difference and then you should get an amount of 27,000. So we bought goods for 30,350, but recorded as if we bought lesser goods, which means we owe our supplier 27,000 as well, right? We need to go and increase the amount owed to the supplier by how much? By 27,000. Are we clear? And then from the supplier side, we bought goods for 30,350, but on their side, they have recorded as if we bought more goods on credit for how much? 35,350. Can you see that on their side, they have overcasted the amount that we owe them? On our side, we only bought goods on credit for 30,350, right? So you work out the difference and then you should get 5,000. So they have increased the amount that we owe them by 5,000 more. What do? We need to go and decrease that amount, minus 5,000. All right? So I hope you understand that transaction. Remember, I said there are adjustments that will sometimes affect the supplier and the business. All right? So let us go to our last adjustment. Sorry guys, last adjustment. I don't know what happened there. Okay, so before we can go to our last adjustment, please note that we are offering online classes. Okay, we're offering online classes. Which subjects do we take? We're taking accounting, we're taking maths, we're taking maths lit, we're taking economics, we're taking physics, we're taking life science, and also business studies. So it is accounting, economics, physics, maths, maths lit, business studies, and life sciences. All right, so if you want more information, guys, let me give you my number there. Here is my number: 063-33-92565. Okay, please contact me. I will definitely assist you. So let us proceed. The last information what we have: goods for 45,000 which were bought on 31st August 2025. Okay, was recorded by Fati Superstore. The statement of account is dated 25 August. Okay, we bought goods on credit here. If we're buying goods on credit, guys, just know that that should increase the amount owed to the supplier. Okay, but now I was supposed to mention something from the last adjustment. The last error: once they say an invoice, just know businesses, they are buying goods on credit. Invoice represents credit purchases. All right, so let's go to the last one: goods for 45,000 which were bought on 31st August was recorded by Fati Superstore. On our side, we did record this transaction, therefore it will not affect the creditor's ledger account. So what happened? The statement of account is dated 25 August. So the date there, what do we need to do? We need to go and increase from the supplier side the amount that we owe them. We owe them 45,000 for credit purchases. All right, so you can press your calculator there, and then you should find an amount of 117,640, and then voila, we are done. Okay, so thank you, guys. Please make sure that you are subscribing, you are liking, and also follow me from TikTok. If you want to join our online classes, please take my number and then we shall talk. If you want this question paper, just comment paper as well.